Hello friends, I hope you are all doing good. Welcome back. So in this video we are going to quickly cover the entire revision of entire GST syllabus in less than 1 hour 30 minutes. We'll just take 1 hour 30 minutes for completing the entire syllabus in 90 minutes, not even 100 minutes. In 90 minutes we'll be completing the entire GST syllabus right from your introduction topic till section 52. So from section number 7 till section number 52, entire revision we are going to do in less than 90 minutes. We'll try to cover it in less than 90 minutes. So this will be useful. Please note, before I start the discussion, let me just tell you that this video will be useful only for those students who have already studied the GST. Please note, it is not useful for everyone. It will be useful for only those students who have already completed studying GST, and this is useful for you for your daily revision purpose or for one day before examination revision purpose. So for one day before examination, if you want to go through the entire syllabus in 90 minutes, in less than 2 hours, etc., then you can use this material. Entire syllabus completely I have discussed. Please note, it will help you to at least understand, okay, these are the different topics, okay, these are the different provisions which are there under GST law. Now this is the section summary or Sanjeevni Buti material which I normally give. This material is going to talk about what is the section number, what is that section talking about. So the section summary of the section is given. So you can either use this material you can use only if you have completely studied the provisions and you know what provision is there under GST law and you know about the subject, or else you can use my revision material. Now this revision material which is there, this revision material is fully amended revision material is available. So where will I get this revision material or this section summary material, sir? This section summary, in this section summary the entire GST syllabus is covered in just 4 pages. In 4 pages. So 4 pages means, say if this is a page 1, 2, 3, 4. So in 4 pages the entire syllabus is covered. Just in 4 pages, just in 4 sheets the entire syllabus is covered. So you can use it. You can say take a printout of that and keep it in your bag. It will be very handy. You can keep it in your pocket. You can keep it in your purse, etc. You can check it whenever you feel like revising GST. And this handwritten notes is there. Entire syllabus is covered over here. Completely amended syllabus is there. This notes, if you want, it can be you can download these notes also along with the section summary notes from my Telegram channel. It will be available in my Telegram channel. I will provide the link for the Telegram channel below this particular video. So yeah, this was one point which, now please note, if you are a person who has studied this GST law completely and who has fair idea about this subject, you can use this material, section summary material, for watching this revision video. But no sir, I have not studied the syllabus completely, or I don't know the complete provisions in detail, meaning I will have to also refer the notes for I will also have to refer the notes when I am listening to you. In such cases you use this material. You use this material because here I have written all the provisions completely, detailedly, but in this section summary I would have written only the crux or gist of that particular section. Now with this being said, let us straight away start our discussion on this particular section summary. Sanjeevni Buti starts now. Now in our first chapter, in our introduction chapter, so let me straight away start the discussion now. It will be very fast. Please mind you, this will be very fast. It will not be slow, it will be very fast. So your concentration should be completely on the screen and on me. So your introduction topic, majorly introduction topic is you will get MCQ based questions from this topic. What do you mean by tax? Tax is pecuniary burden laid upon individuals and property owners. There are 2 types of taxes. One is called as direct taxes and another one is called as indirect taxes. Direct taxes incident impact is on same person. Indirect taxes incident impact is on 2 different person. Direct taxes are progressive in nature and indirect taxes are regressive in nature. The board which takes care of direct taxes is called as CBDT, Central Board of Direct Taxes, and the board which takes care of indirect taxes is called as CBIC, Central Board of Indirect Taxes and Customs. Then what are the features of indirect taxes or features of GST, sir? RCB will win, sir. Who is going to win the IPO this year? RCB will win, sir. R for important source of revenue to the government, C for taxes on commodities and services, B for shifting of burden, W for wider tax base, I for inflation in nature, N for no perception of direct pinch, S for promote social welfare, and R for regressive in nature. Then constitutional provisions with respect to taxation, Article 265, 246 and 245. Article 265 says no tax can be levied or collected unless there is an authority of law. Article 245 says central government has the power to make law for whole or any part of India, and the state government or legislature of state has the power to make law for whole or any part of that particular state. Article 246 has a schedule called as schedule number 7, which talks about 3 lists: union list, state list and concurrent list. Whatever is there in union list in respect of that, only central government can make the law. Whatever is there in state list in respect of that, only state government can make the law. And whatever is there in concurrent list in respect of that, jointly central government and state government can come together and make the law. Now in our entire constitution, there was not even a single article which gave the power to both central government as well as state government to jointly come together and make law with respect to good taxation. Therefore, an amendment was supposed to be made in our constitution. Constitution's 101st Amendment Act 2016 came into existence. Why did it came into existence, sir? Because GST is a type of tax which will be collected by central government and state government jointly. Simultaneously, it will be collected by central government and state government. Now, we had to introduce some articles in our constitution to give this power to both central government and state government. Therefore, an amendment was made in our constitution, 101st Amendment Act 2016. It is because of this Amendment Act in the constitution, provisions with respect to GST were introduced in constitution. Article 246A, 269A and Article 279A were introduced. Article 246A is the article which gave the power to central government and state government to jointly come together and make law with respect to goods and service tax. And it also told, Article 246 also told that I give exclusive power to central government to make law in respect of interstate supply. Now for an amendment to come, there will always be an amendment bill which will be introduced in the parliament of Lok Sabha and Rajya Sabha. So this Constitution's 101st Amendment Act 2016 came into existence because of Constitution's 122nd Amendment Bill. Because of what's the Constitution's 122nd Amendment Bill. Okay, so apart from that, which is the first country to introduce GST? Sir, France was the first country to introduce GST, and India had adopted Canadian model of GST. So we have adopted, so there are different countries which has their own models. We have adopted a model which is used by Canada. India follows a destination based principle and GST is a consumption based tax. India follows what principles are destination based principles and GST is what, sir? Consumption based tax. And India follows what's a dual GST model. India follows what models are dual GST model. Now we have totally 8 union territories. Puducherry, Delhi, Jammu and Kashmir, Andaman, Nicobar, Lakshadweep, Diu, Daman, Dadar, Nagar Haveli, Chandigarh and Ladakh. Now there are 3 union territories which is Puducherry, Delhi and Jammu and Kashmir, which will be regarded as state for the purpose of GST law. So whenever you are making a supply in these union territories, though it is an union territory, it will be called as state for the purpose of GST law. And whenever you are making a supply in these union territories, you are going to pay intrastate supply, you are going to pay CGST and SGST. Normally when you make a supply in union territory, it is CGST and UTGST, but in case of these 3 union territories, it is CGST and SGST. Then what is important in first chapter, sir? What are the different taxes which got subsumed with GST? Central taxes which got subsumed with GST were central excise duties, central sales tax, service tax, CVD, special CVD, excise duty on toilet, medical and toilet preparations, and all other types of surcharges which were collected by this central government on goods and services. The state taxes which got subsumed with GST are VAT and sales tax, entertainment tax, luxury tax, tax on lottery betting and gambling, purchase tax, entry tax or tax on advertisement, entertainment taxes except the taxes collected by the local bodies. The taxes which did not get merged with GST are the custom duty, the taxes, electricity duty or stamp duty, property tax, excise duty on medical, alcoholic liquor for human consumption, and entertainment taxes collected by local bodies. Some very important point which you have to note in our first chapter is that on tobacco and tobacco products, GST as well as pre-GST taxes, which is central excise duty, will be levied. On opium, Indian hype and narcotic drugs, GST as well as pre-GST taxes, that is state excise duty, will be levied. On alcoholic liquor for human consumption, GST will never be levied. And on HPMAN, which is high speed diesel, petroleum, food, motor spirit, aviation type and fuel and natural gas, GST will be levied from a future date as may be notified by the government. Then advantages of GST is its cinema. What is advantages of GST, sir? It's cinema. Then very important point in our first chapter is GST Common Portal. GST Common Portal is developed, designed and managed by a company called as GST and Goods and Service Tax Network. It is a Section 8 company. How do I access it, sir? It is a website called as gst.gov.in. We can access it through internet. We can perform various different functions on this GST Common Portal. Which are these functions, sir? Like filing of returns, filing of registration applications, payment, generation of payment challan. It acts as clearing house. It helps in settlement of of IGST, and it also generates business intelligence. Article 269A talks about levy and collection of taxes on interstate supply. On whenever there is an interstate supply, you are going to levy a tax called as IGST. This IGST will be collected by it will be levied and collected on interstate supply by the central government, and once it is collected by the central government is going to distribute it equally between central government as well as the consumer state. Then most important in our first introduction chapter is Article 279A. Most important is Article 279A. What is Article 279A talking about, sir? Article 279A talks about GST Council. GST Council, what the Constitution 101st Amendment Act 2016 told was, as soon as the provisions of this 101st Amendment Act comes into existence, within 1 month GST Council should be formed. The provisions with respect to GST Council were introduced on 12th of September 2016, and the GST Council was constituted on 15th of September 2016. Now this GST Council consists of different people. One is the chairperson of the GST Council, who is the Union Finance Minister, and it also contains members. These members are nothing but the union ministers who are in charge of revenue and finance, the Minister of Finance and Taxations, and any other person nominated by the state government. Now these members should elect one among them to be called as vice chairperson. Now what is this GST Council useful for, sir? This GST Council is going to give different types of recommendations. It is going to give the different types of recommendations with respect to the taxes, surcharge and cess which is required to be subsumed with GST, and the taxes, surcharge and cess which is not required to be subsumed with GST. What are the different types of GST rates for different types of goods and services which I should levy? What are the different types of goods and services on which I should not charge any GST, etc.? What should be the principle for determining the nature of supply, for determining the place of supply, etc.? What should be the limit for taking registration under GST law, and how do I classify different goods and service tax under GST law? Now there are totally 11 special category states. Now for these 11 special category states, what are the different special provisions which we should make for these 11 special category states? Which are these 11 special category states? Are Sikkim, Nagaland, Manipur. Yes, Nagaland, ma'am, through Michael Jackson. Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, and Mizoram and Jammu and Kashmir. And it is also, this council is also going to tell from which date will GST be levied on HPMN. Now, how do I decide a particular matter in the GST Council, sir? That in GST Council a matter is decided by conducting a meeting, and the minimum number of members who are required to be present in the meeting, the quorum of the meeting is half of total number of members. Now, how will they decide, sir? The decision is going to be taken based on the voting. So, how will I vote, sir? I will take simple majority of not less than 3/4 of weighted votes of members who are present and voting. I'll take majority of not less than 3/4 of weighted votes of members who are present and voting. The weight assigned to central government is 1/3, and the weight assigned to the state government is 2/3. Now let us straight away come to our second chapter, which is, let us now start it from our GST summary book. So this summary book, if you see, it is just 4-page material, 1, 2, 3, 4. This 4-page material will cover your entire GST. This 4-page material covers your entire GST. It covers how many marks? It covers almost around say 48 marks, assuming that the introduction topic contains 2 marks. So it covers your 48 marks. If your question paper is for 50 marks, it covers how much marks, sir? Almost 48 marks is covered under this particular 4 pages which you are going to see now. Let me start with section 7. Section 7 talks about what's the supply under GST. What is the taxable event under GST law, sir? The taxable event under GST law is supply of goods or services or both. Section 7 gives the meaning of that particular supply. Section 7 subsection 1 clause A says supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. What do you mean by goods, sir? Goods means every kind of mobile property other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land. What do you mean by services, sir? Services means anything other than goods, money and securities, but includes activity in relation to use of money or its conversion, for which a separate consideration is charged. Sir, what do you mean by consideration? Consideration means consideration includes payment in money or otherwise by the recipient or any other person, but it shall not include subsidy given by central government or state government, monetary value of any act or forbearance by the recipient or any other person, but it shall not include subsidy given by central government or state government. Further, refundable deposits shall not form part of consideration unless they are adjusted as consideration. Section 7 subsection. Sir, what do you mean by recipient? recipient. Recipient to a remark, check whether for a particular transaction of supply of goods or services consideration is there or consideration is not there. If consideration is there for both supply of goods and services, it is the person who is paying the consideration we treat as recipient. If consideration is not there for supply of goods, it is the person to whom the goods are delivered, and for supply of services, it is the person to whom the services are rendered. And supplier means the person who is supplying goods or services and includes the agent of such supplier. Section 7 subsection 1 clause B says supply includes importation of services for a consideration whether in the course of business or not. So if you are importing any services for a consideration, whether you are importing it for your business or not, will be treated as supply. It will be treated as supply. Sir, what do you mean by importation of services? Sir, importation of services means supplier is outside India, recipient is located in India, and the place of supply is also in India. Then section 7 subsection 1 clause C talks about supply without consideration. Section 7 subsection 1 clause C says there is an article called as there is a schedule called as schedule number. There is a schedule called as what, sir? Schedule number 1. In this schedule, there are totally 4 activities. These activities will be treated as supply even if there is no consideration involved. Which are these 4 activities, sir? Permanent transfer or disposal of business asset provided input tax credit has been availed on such business asset. Supply of goods or services or both between related person or between distinct person if it is made in the course or furtherance of business, provided that any gift given by employee to the employer any gift given by employee to the employer, if the value of the gift is not exceeding 50,000 rupees per annum per employee, then it is not a supply. If the value exceeds 50,000, entire amount will be treated as supply. Then what's up? Supply of goods by principal to his agent or vice versa, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name, whose names are agent names himself. And lastly, importation of services by a person from his relative outside India or from his another establishment located outside India if it is made in the course or furtherance of business. So these 4 points which we just now saw are treated as supply even if there is no consideration involved. Then section 7 subsection 1 clause AA. Now section 7 subsection 1 clause AA, newly added point says section 7 subsection 1 clause AA says activities or transaction by a person other than individual to its own members will be treated as supply even if there is no will be treated as supply if there is a consideration involved. Section 7(1) capital A says there are few items which are specified in schedule number 2. All these items which are there in schedule number 2, all these items which are there in schedule number 2 are supply as per section 7 subsection 1. But I am going to tell you schedule number 2 is going to clarify whether it is a supply of goods or supply of services. Now the crux of schedule 2 is that if there is a ownership transfer or title transfer, then it will be treated as supply of goods, and if only right in a goods is transferred, then it will be treated as supply of services. Then section 7 subsection 2 talks about negative list of supply or no supply. Negative list of supply or no supply, it's there are government notified and schedule 3 activities, meaning activities which are neither treated out as supply of goods nor supply of services, it is given in schedule number 2. Government has notified 2 activities: grant of liquor license by state government and activities performed by panchayat or municipality under article 243G or 243W. Then schedule number 3 gives list of totally 9 activities which will not be treated as supply. Which are these activities, sir? Services given by employee to the employer in the course of employment, services given by court or tribunal except arbitral tribunal, services given by ML, MP, President, Prime Minister, Chairperson of GST Council, etc. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased, sale of land, and the sale of building subject to para 5 of schedule 2. Then actionable claims except specified actionable claims, there is an amendment in this point. So actionable claims except specified actionable claims will not be treated as supply. What is this specified actionable claims? There are totally 6 actionable claims which are specified. If you do transaction in these 6 actionable claims, it will be treated as supply. So which are these 6 actionable claims, sir? These 6 actionable claims are lottery, betting, gambling, then horse racing, online money gaming, and casinos. So if normally if you do a transaction actionable claims, it is not a supply, but if you do transaction in these 6 actionable claims, it will always be treated as supply. Then third country sales, warehouse sales, and high sea sales. Section 7 subsection 3, you can ignore this particular section. In time pass section, it says government may notify some activities to be treated as supply of goods instead of supply of services, and it may notify some activities to be treated as supply of services instead of supply of goods. They have not yet notified anything over here. Section 8 talks about taxability of composite and mixed supply. Composite supply are taxed at the rate of principal supply, and mixed supply are taxed at highest rate. Sir, what do you mean by composite supply? Sir, composite supply means supply of 2 or more taxable goods and services which are naturally bundled in ordinary course of business, supplied in conjunction with another one of which is principal supply is a composite supply. If it is a composite supply, then it is required to be taxed at the rate of principal supply. Mixed supply means supply of 2 or more individual goods and services which are not naturally bundled in ordinary course of business, supplied in conjunction with another form a single price, and which is not a composite supply, is a mixed supply. If it is a mixed supply, it is taxable at what rates? Mixed supply are always taxable at highest rate. Then section 9 talks about charging section. It talks about what's the charging section. Section 9 subsection 1 says section 9 subsection 1 says subject to the provision of subsection 2 there shall be levied a tax called as central goods and services tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 20%. Therefore, section 9 subsection 1 says, sir, whenever you are making an intrastate supply, CGST will be levied. It will be levied on all different types of goods and services except on alcoholic liquor for human consumption. That it will be levied at the rate notified by the government, but the maximum rate which government can notify is only 20% under CGST. So maximum CGST rate which can be there is 20%, and maximum IGST rate which can be there is 40%, double of this. And section 9 subsection 2 says CGST on HP man shall be paid. CGST on HP man shall be levied from the date notified by the government. So as of now, for HP man there is no GST levied. It will be levied from a future date as may be notified by the government. Section 9 subsection 3. Section 9 subsection 3 talks about what's the section 9 subsection 3 talks about. Section 9 subsection 3. Section 9 subsection 3 says what, sir? Section 9 subsection 3 talks about reverse charge mechanism. It says there are some goods and services which are notified. On these goods and services, the recipient of the goods and services will have to pay the tax on the reverse charge. Which are these goods and services, sir? Goods are not important. Services taxable under reverse charge are very important, and these services are notified through a notification called as notification number 13/2017. Please remember this notification number 13/2017. It gives a list of services taxable under reverse charge. Which are the services taxable under reverse charge, sir? Services given by a GTA to 7 notified persons. The 7 notified persons have to pay the tax under reverse charge. Legal services given by an advocate to a business entity. Then arbitral tribunal giving services to a business entity. Sponsorship services given by a partnership firm including LLP or a body corporate. Sponsorship services given by any person to a partnership firm or a body corporate. Government giving services to business entity. The business entity will have to pay the tax under reverse charge. And government renting of immovable property services given by government to a registered person. The registered person will have to pay the tax under reverse charge. Renting of residential dwelling for renting of residential dwelling to a registered person. The registered person will have to pay the tax under reverse charge. It does not matter for what purpose the residential dwelling are rented to the registered person. Then transfer of development right, floor space, index, long-term lease to a promoter. The promoter will have to pay the taxes. Director of the company is giving the services to the said company. The said company will have to pay the taxes under reverse charge. However, please make sure that the director, if he is giving services in his private capacity, in his personal capacity, then it will be taxable under forward charge. Director giving services to the company as a director of the company, taxable under reverse charge. Director giving services to the company in his personal capacity, independent capacity is not. It is taxable under forward charge. Then agent giving services to respective people will have to pay the tax under reverse charge. And MAD services given by respective people to producer, publisher, the producer or publisher will have to pay the tax under reverse charge. Sir, what is this MAD services? Services given by related to music, services given by a music composer, artist, or dramatic services. And then security service, then author giving services to the publisher will have to pay the taxes under reverse charge. However, author also has an option to pay the taxes under forward charge. Security services given by any person other than a body corporate to a registered person, the registered person will have to pay the tax under reverse charge. Renting of motor vehicle services given by any person who is opting to pay tax at 5% to any person other than body corporate to a body corporate, the body corporate will have to pay the taxes under reverse charge. So these are the different services which are taxable under reverse charge under section 9 subsection 3. Section 9 subsection 4 also talks about reverse charge but not relevant for intermediate students. Section 9 subsection 3 says there are some goods and services which will be notified by the government. On these goods and services, the notified registered person will have to pay the taxes if he is purchasing it from unregistered person. Section 9 subsection 5 talks about supply through e-commerce operator. If notified, section 9 subsection 5 says if notified services are supplied through e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. Provided that if the e-commerce operator does not have physical presence in India, any person representing that e-commerce operator in taxable territory, that is India, should pay the taxes. Provided further that if the e-commerce operator does not have physical presence in taxable territory and there is no representative of the e-commerce operator in India, then he will have to appoint a person in India to pay such taxes. Sir, what do you mean by e-commerce operator? Sir, e-commerce operator means a person who is owning, maintaining, managing an electronic platform for electronic commerce. Sir, what are the services notified under section 9 subsection 5? Sir, the services which are notified under section 9 subsection 5 are transportation of passenger services, hotel accommodation services, housekeeping services, and restaurant services. Section 10 talks about what's the section 10 talks about composition levy. Section 10 subsection 1 says Eligibility. Who is eligible to become a composition dealer, sir? Every registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores is eligible to become a composition dealer. He can pay the tax at composite rates instead of paying the tax at normal rates. The limit is what, sir? The limit of aggregate turnover is 1.5 crores in normal cases. However, in case of 8 special category states, the limit is 75 lakhs. Sir, which are these 8 special category states for which the limit for composition scheme is 75 lakhs, sir? Num must. N for Nagaland, U for Uttarakhand, M for Manipur, M for Meghalaya, M for Mizoram, A for Arunachal Pradesh, S for Sikkim, and T for Tripura. Num must are the 8 special category states for which the limit for taking registration under composition scheme is how much, sir? For which the limit for taking registration under composition scheme is 75 lakhs. And please note, if you are having the place of business in special category states, for you the limit of special category states will apply to entire India. Now section 10 subsection 1 talks about eligibility, and it also says this limit of 1.5 crores can be increased up to 2 crores by the government if it feels like increasing. And there is a proviso which says that sir, what are the composite rates? Before telling the proviso, what are the composite rates? Section 10 subsection 1 says eligibility. Every registered person is eligible to opt for composition. Every registered person may opt for composition scheme if his aggregate turnover in the preceding financial year has not exceeded 1.5 crores or 75 lakhs. He can pay the tax at composite rates instead of paying the tax at normal rates. What are the composite rates? If you are a manufacturer, it is 0.5% of turnover in the state. If you are a restaurant or outdoor catering service provider, it is 2.5% of turnover in the state. And if you are any other type of dealer in goods, then it is 0.5% of taxable turnover in the state. Please note, when I say 0.5%, it is 0.5% CGST. So we have 0.5% CGST, 0.5% SGST. Collectively, the effective rate will be 1% of turnover in the state. And in case of restaurant, it is 5% of turnover in the state. And in case of other dealers, it is 1% of taxable turnover in the state. Sir, what do you mean by aggregate now? A person who is eligible to opt for composition scheme as per section 10 subsection 1 can also supply services. How much services can he supply, sir? He can supply services worth 10% of the turnover in the state or union territory, or rupees 5 lakhs, whichever is higher. Then, sir, what do you mean by aggregate turnover? Aggregate turnover means aggregate value, that is total value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. This aggregate turnover shall not include inward supply liable for reward charge and what, sir, taxes under GST law. It shall not include inward supply liable for reward charge and taxes under GST law, that is CGST, SGST, IGST, UTGST. Then what, sir? Then now please note, whenever you are computing the eligibility limit, whenever you are computing the turnover in the state or union territory, and whenever you are computing the aggregate turnover for checking the eligibility of a composition dealer, never include interest income. Please don't include which income, sir? Please don't include interest income for computation of aggregate turnover, turnover in the state or union territory to find the tax liability, as well as finding the value of services as per second proviso to section 10 subsection 1. Please don't include interest income. Then section 10 subsection 2 says condition for composition scheme. If you want to become a composition dealer as per section 7 subsection 10 subsection 1, then you will have to satisfy totally how many conditions, sir? 6 conditions. Which are these conditions, sir? He should not supply services other than those services specified under section 10 subsection 1. He should not make non-taxable supplies. He should not make interstate outward supply. He should not supply through an e-commerce operator who is required to collect the taxes under section 52. He should not manufacture notified goods, which is nothing but pati, bricks, pan masala, irritated water, tobacco and tobacco products, ice cream and bricks, roofing tiles, etc. And he should not be a casual taxable person and non-resident taxable person. Section 10 subsection 2 also, subsection 2 also has a proviso which says that if there are more than one registered person under same PAN, if one is opting for composition scheme, others also should compulsory opt for composition scheme. Section 10 subsection 3 talks about composition scheme shall lapse. Your composition scheme shall lapse in the current financial year if your aggregate turnover has exceeded how much, sir? If your aggregate turnover has exceeded specified limit of 1.5 crores or 75 lakhs or 50 lakhs in case of service provider. Section 10 subsection 2A talks about composition scheme for service provider. Section 10(2)(a) says that if you are a person who is not eligible to become a composition dealer as per section 10 subsection 1 and your aggregate turnover in the preceding financial year has not exceeded 50 lakh rupees, you are exclusively engaged in supply of services other than restaurant services, then you can opt for composition scheme as per section 10 subsection 2A, wherein you will have to pay a tax equal to 3% of turnover in the state, 3% CGST and 3% SGST, and other conditions which are applicable to a normal composition dealer will also be applicable to you. Then section 10 subsection 4 says a composition dealer cannot issue tax invoice and he cannot collect taxes on his supplies. He cannot issue tax invoice and he cannot collect taxes on his supplies. Sir, what will he issue, sir? A composition dealer will issue a document called as bill of supply. Then section 10 subsection 5 says the proper officer, the GST officer may issue notice to the composition dealer if he opts for composition scheme, though he is not eligible to opt for composition scheme. Now, once the notice is issued by the proper officer to the composition dealer, he'll have to reply to the notice. If his reply is satisfactory, very good. If his reply is not satisfactory, he'll have to pay the taxes at normal rates, and provisions of section 73 and 74 penalty provisions may apply. Then rule number 5 talks about other conditions for a composition dealer. A casual taxable person and non-resident taxable person cannot become a composition dealer. Composition dealer will have to mention the words composition taxable person on the notice board or signboard which is displayed in his business premises. Then he'll have to mention the words composition taxable person not eligible to collect taxes in the bill of supply which is issued by him. And composition taxable person will have to file the return annually once in a year. The return which he has to file is called as GSTR4. This GSTR4 is required to be filed annually by 30th April of next financial year, and he has to file he has to make the payment of taxes on quarterly basis by using a form called as form GST PMT08. This tax is required to be paid by him quarterly. What is the due date, sir? 18th of next month following the quarter. 18th of next month following the quarter, he'll have to make this payment of taxes to the government. Then section 11 talks about exemptions. Section 11 subsection 1 talks about general exemptions. Section 11 subsection 2 talks about special exemptions, and section 11 subsection 3 talks about what's an explanation to an exemption. Section 11 subsection 1 says general exemptions will be given in public interest by way of a notification. It will be applicable to every person. Then section 11 subsection 2 talks about special exemption. It will be given by way of special order. It will be applicable only to that person who is seeking for those exemptions. And if any section 11 subsection 3 says if any explanation is given within 1 year from the date of exemption notification, that then that explanation will deem to have been included right from the date when the exemption notification or the exemption order was issued. Section 12 talks about what's the section 12 talks about time of supply of goods. Section 12 talks about what's the time of supply of goods. Section 12 subsection 1 says the liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. Section 12 subsection 2, in case of forward charge, the time of supply will be date of check whether the invoice has been issued within the due date or invoice is not issued within the due date. If invoice is issued within the due date, date of invoice or date of payment, whichever is earlier. If invoice is not issued within the due date, date of invoice, last day to issue invoice as per section 31, or date of payment, whichever is earlier. Sir, what do you mean by date of payment? Date of payment means the date on which the amount is getting credited to the bank account, or the date on which the entry has been made in the books of accounts, whichever is earlier. Sir, what is the last day to issue invoice as per section 31? The last day to issue invoice as per section 31 in case of supply of goods is if movement is there on or before removal, if movement is not there on or before delivery. If it is a case of continuous supply of goods, successive statement date or successive payment date, whichever is earlier, and in case of sale on approval basis, date of approval or 6 months from the date of removal, whichever is earlier. So in case of reverse charge of goods, what is the time of supply? So section 12 subsection 3 says in case of reverse charge, the time of supply will be date of making the payment, date of receipt of goods, or 31st date from the date of supplier invoice, whichever is earlier. So in case of vouchers, what is the time of supply? So check whether it is supply identifiable voucher or supply not identifiable voucher. If it is a supply identifiable voucher, the time of supply will be date of issue of voucher. If supply not identifiable voucher, time of supply will be date of redemption of voucher. And residual cases, in residual cases, section 12 subsection 5 says the time of supply will depend upon whether you are filing returns or not. If you are filing returns, then the due date of filing returns should be taken as time of supply, and in all other cases it will be taken, if you are not filing returns, etc., if you are not a registered person, then it will be the date on which you are making payment of taxes. Now section 12 subsection 6 says if there is any interest penalty late fee for delayed payment of consideration, that interest penalty late fee shall be added in value of supply, and it shall be added added, and accordingly time of supply will be the date of receipt of such amount. Whenever you are receiving that amount, that day it will be treated as time of supply. Section 13 talks about time of supply of services. Section 13 subsection 1 says the liability to pay tax in case of supply of services shall be time of supply as determined under section 13. Section 13 subsection 2 says in case of forward charge, the time of supply will be check whether the invoice has been issued within the due date or not. If the invoice has been issued within the due date, the time of supply will be the date of issue of invoice or date of payment, whichever is earlier. But however, if the invoice is not issued within the due date, the time of supply will be the date of completion or date of payment, whichever is earlier. Sir, what is the last day to issue invoice as per section 31 in case of services, sir? In normal cases, the invoice is required to be issued on or before completion or within 30 days from the date of completion. This 30 days shall be replaced by 45 days in case of banking company, financial institutions. In case of in case of continuous supply of services, check whether the due date of payment is ascertainable. If due date of payment is ascertainable from the contract on or before that date, invoice is required to be issued. If due date of payment is not ascertainable on or before the date of receipt of payment, invoice is required to be issued. And if the payment is linked to completion on or before completion, the invoice is required to be issued. Then, in case of reverse charge of services, very important, normally they'll ask in the examination, in case of reverse charge of services, the time of supply will be date of making the payment or 61 days from the date of supplier invoice, or what's 61 days from the date of supplier invoice, whichever is earlier. In case of vouchers, it is same, supply identifiable voucher, date of issue of voucher, supply not identifiable voucher, date of redemption of voucher. Then, in residual cases, are you a person who is filing the returns? Yes sir. Then the due date of filing returns. In all other cases, it is the date on which you are making the payment of taxes. And in case of interest, penalty, late fee, then if the date of receipt of such amount will be taken as time of supply. Now, whenever there is a change in rate of tax, section 14 not applicable for CA inter students. For CA inter students, it is not applicable. It is applicable for CMA as well as CS inter students only. Time of supply in case of change in rate of taxes. Section 14 says check whether the supply is made before change in rate of tax or after change in rate of tax. If supply is made before change in rate of tax, the time of supply will be I'll just tell you the crux. Now, please note, whenever there is a change in rate of tax, the date of supply will never become time of supply. Who is going to become time of supply, sir? Either the invoice date or the payment date. One among them will become time of supply. Whoever is with supply, will become time of supply. If invoice is with supply, time of supply is date of invoice. If payment is with supply, time of supply is date of payment. If sir all the three are together, then date of invoice or date of payment, whichever is earlier. If both invoice and payment are not with supply, then the time of supply will be date of invoice or date of payment, whichever is earlier. Now, next is section 15 talks about what's the value of supply. Section 15 talks about what value of supply. Section 15 subsection 1 says value of supply is transaction value. What do you mean by transaction value? Transaction value means the price which is actually paid or payable with the supplier as well as the recipient is not related, in the price which you are paying is the sole consideration. Section 15 subsection 2 talks about inclusions in value of supply. There are few things which are required to be included in value of supply, sir. Which are these three things are there today? 5 things which are required to include in value of supply. All taxes except the taxes under GST law is charged separately. Then payment made by the recipient which the supplier had to incur. Then incidental expenses for making the supply, interest, penalty, late fee for delayed payment of consideration, and subsidy directly linked to the price, excluding the subsidy given by central government or state government. Okay, then exclusions from value of supply. What are different things which are required to be excluded from value of supply, sir? Only one thing can be excluded from value of supply, which is called as discount. Now, this discount can be given before or the time of supply, or it can be given after supply. If any discount is given before or the time of supply, then please exclude it from value of supply if it is shown separately on the invoice. If any discount is given after supply, then exclude it from value of supply if 3 conditions are satisfied. Which are the 3 conditions, sir? That discount should be agreed between the supplier and recipient. That discount should be linked to specific invoice, and input tax credit in respect of that discount should be reversed by the recipient. Then section 15 subsection 4, section 15.4 and 15.5 applicable for CMA inter as well as CS inter students. It is not applicable for CA inter students. Okay, for CA inter students. So next 5 minutes you can next 3 minutes you can just forward CA inter students. Okay, section 15 subsection 4 says if you are not able to determine the value of supply as per section 15 please determine as per rules. The rules of valuation, rule number 27, value of supply when consideration is not wholly in money. If consideration is not wholly in money, value of supply will be open market value or money plus fair value of other consideration or value of like and quality or money plus rule 30-31 in that order. Now, what is rule number 30 telling? Cost based valuation. It says value of supply will be 110% of cost of production, cost of acquisition, or cost of provision of services. And rule number 31 says if you are not able to find the value of supply as per any of the above rules, then please apply the principles of section 15 consistently and reasonably to find the value. Then rule number 28 says when you are making a supply to a registered person or deemed distinct person referred to in section 25.4 or 25.5, then the value of supply should be taken as open market value. Or if open market value is not available, take the value of like and quality. If the value of like and quality is also not available, apply rule number 30 and 31 in that order and find the value. Then rule number 29 says whenever you are making, then there are also 2 provisos in this. In rule number 28 there are 2 provisos. Proviso number 1 says where the goods are supplied as such by the recipient, then at the option of supplier, the value of supply can be taken as 90% of the amount charged by the recipient from his customer who is not a related person. And second proviso says that the value declared on the invoice will only be taken as will only be taken as open market value if the recipient is eligible for full input tax credit. Then then rule number 29, when you are making a supply to an to or by agent, then the value of supply will be open market value or 90% of the amount charged by the customer, amount charged by the recipient from his customer. And or if that is not available, then apply rule number 31 in that order. Rule number 30 talks about cost based valuation, meaning value of supply will be 110% of cost of acquisition, cost of production, or cost of provision of services. And rule number 31 talks about residual method. Residual method says apply the principles and provisions of section 15 reasonably and consistently to find the value. Then what's that? So rule number 31A, in case of lottery, betting and gambling, value of supply will be the face value or the lottery price into 100 divided by 128. And in case of betting and gambling, horse race, etc., 100% of the face value, that is the 100% of the amount which you have given on bet. Then rule number 32 talks about what's the rule number 32 talks about it is an optional rule given to different categories of people. So different categories of people have given options. Rule number 32 sub rule 2, for a money changer he has option number A and option number B. For a money changer, the value will be check whether RBI rate is specified or not specified. Now for a money changer means what's a person who is involved in exchanging foreign currencies. So check whether the currency which you are exchanging involves Indian rupees. So I am talking about option number 1. Check whether the currency which you are exchanging involves Indian rupees or it does not involve Indian rupees. If it involves Indian rupees, then the value of supply will be the difference between it involves Indian rupees or it does not involve Indian rupees. If it involves Indian rupees, check whether RBI rate is there or not there. If RBI rate is there, then the value of supply will be the difference between RBI rate minus the amount charged, the rate charged by foreign exchange dealer into number of units exchange. If RBI rate is not available, then see the rupee value of currency exchange into 1% will be taken as value of supply. And in case of if the currency which you are exchanging does not involve Indian rupees, then check the rupee value of currency bought and rupee value of currency sold. Compare both of them. Whichever is less will be taken as value of. Whichever is less will be taken. Take that whichever is less multiplied by 1%, you will get your value of supply. In option number 2, they have given slab basis. So if you are exchanging currency up to rupees 1 lakh, then the value of supply will be 1% of the gross currency exchange or rupees 250, whichever is higher. If you are exchanging from 1 lakhs to 10 lakhs, then it is 1000 rupees plus 0.5% of gross currency exchange above rupees 1 lakh. And if you are exchanging more than 10 lakh rupees, then 5500 plus 0.1% of gross currency exchange above rupees 10 lakhs or rupees 60,000, whichever is less will be taken as value of supply. So if you are a air travel agent, if you are booking domestic travel, the value of supply will be 5% of base fare. If you are making an foreign travel, then the value of supply will be 10% of base fare. In case of insurance agents, in case of insurance agent, check what type of life insurance agent. We are talking about what type of agents are life insurance agent. If it is a saving policy, check whether it is a saving policy, risk policy, or single premium policy. If it is a saving policy, then amount allocated towards investment is intimated or not intimated. If amount allocated towards investment is intimated, that value of supply will be the gross premium charge minus amount allocated towards investments. If amount allocated towards investment is not intimated, then the value of supply will be 25% of gross premium charge for the first years, and for all the subsequent year it will be 12.5% of gross premium charge. And in case of risk policy, the entire premium which you are paying, gross premium which is paid by you, will be taken as value of supply. And in case of single premium policy, in case of single premium policy, the value of supply will be 10% of premium which is paid by you. In case of second hand goods, value of supply will be selling price minus purchase price. Now what is important over here, you can either be a dealer of second hand goods or a repossession of second hand goods. For both the cases, the value of supply will be selling price minus purchase price, provided you satisfy a condition that you supply the goods as such without making any changes, and you should have not taken input tax credit. Then only this particular provision shall apply to you. Now in case of vouchers, so if you have any vouchers, the value of that vouchers will be the money value of the goods and services which you can purchase through that vouchers. And rule number 33 says any expenses incurred by a pure agent for making supply of services shall be excluded while computing the value of supply. And rule number 34 says the exchange rate which you are required to take whenever you are finding the value, when the values are given in foreign currency, for goods take the CBEC rates, the rate notified by CBIC, and in case of services take generally accepted accounting principle rates. And rule number 35 says if any amount is inclusive of taxes, then use this formula to find the tax amount. Tax amount shall be equal to amount what you have received including tax into GST rate divided by 100 plus GST rate. Section 15 subsection 5 says government may notify value of supply in some cases. Those cases government have not yet notified. That one case which the government has notified is with respect to lottery, rule number 31A. Next provision for our discussion is section 16. Section 16 talks about what's the section 16 talks about eligibility and conditions for taking input tax credit. Section 16 subsection 1, who is eligible to take input tax credit, sir? Every registered person is eligible to take input tax credit on goods or services or both which is used or intended to be used in the course or furtherance of business. Section 16 subsection 2 talks about conditions. Section 16 subsection 2 talks about conditions. What are the conditions for taking input tax credits, sir? There are totally 6 conditions now. There are totally how many conditions, sir? There are totally 6 conditions for taking input tax credit. Which are these 6 conditions, sir? The registered person who has to take input tax credit, he should be in possession of tax invoice, debit note or tax paying document. He should have actually received the goods or services except in case of bill to ship to concept. Then the supplier should have paid the taxes. Then the recipient should have filed the returns for taking input tax credit, and the supplier should have communicated the details in his by filing his GSTR1, and the details should be communicated to the recipient in his GSTR2B. And lastly, the details which are communicated to the recipient should not be restricted. So these are the conditions of total 6 conditions. Now apart from that, there are provisos also. If you receive any goods, if you receive goods or services in lots or installment, then the ITC can be taken upon receipt of last lot or last installment. Then if the supplier does not make the payment, if the registered person does not make the payment to the supplier within 180 days from the date of invoice, then whatever input tax credit is availed by him should be reversed along with interest. Interest should be calculated at the rate of 18% per annum. Interest should be calculated from the rate of taking the credit till the rate of reversal of input tax credit. Okay, and interest should be calculated from date of taking credit till the date of reversal of credit. And once you make the payment to the supplier, ITC can be taken by you. Then section 16 subsection 3, in respect of capital goods, input tax credit can be taken by you, but you will not be allowed to take input tax credit on capital goods if you are capitalizing the tax component of capital goods. If you are capitalizing the tax component of capital goods, you will not be allowed to take input tax credit. Section 16 subsection 4, the last date for taking input tax credit is the date of filing annual return or 30th November of next financial year, whichever is earlier. Fantastic. There is an amendment over here. The last date within which input tax credit is required to be taken is date of filing annual return or 30th November of next financial year, whichever is earlier. Then what's the rule number 33 gives the list of other documents based on which you can take input tax credit. You can take input tax credit based on tax invoice, RCM invoice, bill of entry in case of import, and input service distributor invoice. This invoice should have some mandatory details such as tax amount, description of goods and services, value of supply, GST number of supplier, GST number of recipient, place of supply in case of interstate supplies. ITC on invoice not uploaded by the supplier will be restricted. It will be now you will not be able to take input tax credit. Section 16 subsection 4. Section 16 subsection 4. Anyways, this has been removed now. I have not removed it from here. I will remove it. Section 17. Section 17 talks about what's the apportionment of input tax credit or block credit. If you are using any goods or services for taxable as well as exempt supplies for business as well as non-business purpose, then you will have to proportionately reverse the input tax credit. Section 17 subsection 1 says where the goods or services are both are used for business as well as non-business purpose, then take ITC proportionately only for business purpose. If you are using any goods or services or both for taxable as well as exempt supply, take input tax credit proportionately only for exempt supplies, only for taxable supplies including zero rated supplies. Now please note, exempt supply means what? Taxable supplies means the supply of goods or services which are taxable under GST law. Zero rated supplies means export of goods or services or supply made to an SEZ unit or SEZ developer. Exempted supply means supplies which are wholly exempt supplies which are nil rated, and it includes non-taxable supplies. Now, for the purpose of section 17 subsection 2, exempt supply shall also include what's the transaction in security, sale of land, sale of building subject to para 5B of schedule 2, and supply attracting reverse charge. Section 17 subsection 4 says in case of bank, instead of following 17.2, they can directly follow 17.4, wherein they can take 50% of eligible input tax rate and the balance 50%, other 50% shall lapse. Then section 17 subsection 5, fantastic section, most important section, talks about block credit. There are few items on which you cannot take credit at all, they are blocked. If you are having any motor vehicle used for transportation of goods, ITC can be taken. Motor vehicle used for transportation of persons, then check the seating capacity. If the seating capacity is less than or equal to 13, ITC cannot be taken by you. If the seating capacity is more than 13, ITC can be taken by you. Normally, if motor vehicle whose seating capacity is less than 13, ITC cannot be taken by you. However, in 3 cases, ITC will be allowed even if the motor vehicle has a seating capacity of less than 13. Which are these 3 cases, sir? If the motor vehicle is used for transportation of passengers, if you are in the business of further supply of motor vehicle, and if you are in the business of training in motor vehicle, then ITC cannot be taken in case of aircraft and vessels. However, ITC can be taken in case of aircraft and vessels if you are in the business of further supply of aircraft and vessels, if you are in the business of transportation of goods through aircraft and vessels, if you are in the business of transportation of passengers through aircraft and vessels, and lastly what, sir? And lastly, if you are in the business of training in vessels and aircraft, then you cannot take input tax credit on service cost, repairs cost, insurance cost for motor vehicle, vessels and aircraft. Further what, sir? Further, you will not be allowed to take input tax credits on foods and beverages, beauty treatment, outdoor catering, renting cabs, etc., health insurance, life insurance, or membership of any health club, fitness center, or travel benefit extend to employees. You will not be allowed to take input tax rate on these items. However, on these items, foods and beverages, beauty treatment, health surgery, plastic surgery, cosmetic surgery, renting, hiring, leasing of motor vehicle, vessels and aircraft, membership of club, fitness center, and travel benefit extend to employees. On these items, ITC will be allowed if there is a statutory obligation on the employer to provide the same. Works contract, if you are taking any works contract services or goods or services for construction of an immobile property, then ITC cannot be taken by you unless until that immobile property constructed by you is a plant and machinery. Then you will not be allowed to take input tax rate on goods and services on which you have paid the tax under section 10. You will not be allowed to take input tax rate if you are a non-resident taxable person. You will not be allowed to take input tax rate on whatever different types of goods and services which you are procuring in India. However, you can take input tax rate on the goods which is imported by you. You will not be allowed to take input tax rate on goods which are lost, stolen, destroyed, given as free samples or gifts. Now, please note this lecture, whatever whatever this this video which you are seeing, you can use this material, this material, my revision notes which is there, you can use this material because I have written the entire provisions over here. Here I have written the entire provisions. Whatever I am discussing now, entire provisions are written over here. Now see, I was discussing about what, sir? Foods and beverages, outdoor catering, etc. Entire provisions are written in this material. You can use this for revision. Meaning, this GST summary book will be useful for you only if you have studied the entire syllabus. Now, sir, whatever you are telling is not completely written over here, because it is a summary. It is revision material. In 4 pages, what do you want me to do? In 4 pages, if I am completing covering the entire syllabus, that means what, sir? It is just a revision material. So you please make sure that if you want to say read with the flow, if you want to see the material and read, then please use this material. So whatever I am telling you, you hear this and use this material. This material will cover the entire provisions completely detailedly written over here. Now let us continue. Section 18 talks about what's an input tax paid in case of special circumstances. Section 18 subsection 1. Section 18 subsection 1. Person liable to registration. A person who is section 18 subsection 1 clause A says a person who is liable for registration, a person who is liable to take registration and applies the registration within 30 days of becoming liable will be eligible to take input tax rate on inputs held in stock 1 day prior to the date of liable for registration. Section 18 subsection 1 clause B says where a person has applied for voluntary registration, he will be eligible to take input tax rates on inputs which is held 1 day prior to the date of grant of registration. Section 18 subsection 1 clause C says where a composition dealer is converting himself to a regular dealer, then he will be eligible to take input tax rate on inputs as well as capital goods held 1 day prior to the change from composition scheme to regular scheme. Then in case section 18 subsection 1 clause D says a registered person whose exempt supply are becoming taxable supplies will be allowed to take input tax rates on he will be eligible to take what's input tax rates on the inputs held in stock one day prior to the date of change from exempt supply to taxable supplies, as well as on capital goods which is exclusively used for exempt supplies. Now please note, in case of inputs, you are required to compute the capital gain on proportionate basis, whereas in case of capital goods you are required to calculate the ITC amount by reducing 5% from or part thereof from the date of purchasing that capital goods till the date of reversal. Section 18 subsection 2 says, in case of 18(1), no, if the invoice is older than 1 year, you will not be able to take input tax credit. Section 18 subsection 3, whenever there is a change in constitution of business with specific provision for transfer of liability, the unutilized input tax credit of old company can be transferred to the new company. Change in constitution of business can be because of sale, merger, demerger, amalgamation, or the death of sole proprietor. Business is carried on by his legal heirs. Then section 18 subsection 4, where a regular dealer becomes a composition dealer, or where taxable supplies becomes exempt supply, then you will have to reverse the input tax rate on inputs as well as capital goods. Section 18 subsection 5 talks about rules for 18(1) and 18(4), and 18(6), very important section, which says, if you are supplying capital goods or plant and machinery, at the time of supply of that capital goods or plant and machinery, you will have to pay the taxes. How much taxes will I have to pay, sir? I will have to pay a tax equal to tax on transaction value, sale price of that capital goods or plant and machinery, or input tax rate as reduced by 5% per quarter or part thereof from the date of purchase till the date of sale. You will have to reduce the input tax rate. Compare this tax on transaction value or the reduced input tax rate, whichever is higher. This is the amount which you will have to pay to the government. Section 18 subsection, section 19, 20 and 21 are input tax related sections not applicable for CA inter students. Section 19, ITC on in case of job worker. So if the principal is sending any goods for the purpose of job work to the job worker, the principal can take input tax rate on those goods. If the goods are directly delivered to the job worker on the direction of principal, the principal can take the input tax rate on those goods also, provided these inputs which are sent for the purpose of job work should come back to the principal or sold from his from the job worker's location within 1 year. Now similarly, 19(4), 19(5), 19(6) says, where the principal sends any capital goods to the job worker, the input tax rate can be taken by the principal. If the capital goods are directly delivered to the job worker on the direction of principal, then also the principal will be eligible to take input tax rate. However, this capital goods should come back to the principal within a period of 3 years from the date of sending. Now section 20 talks about manner of distribution of credit by input service distributor. An input service distributor can distribute the credit to the persons registered under same PAN. How should he distribute, sir? For distributing the credit, he should use a document called as input service distributor. Now the distribution should be based on the turnover of last financial year. You are required to distribute it based on what's the turnover of last financial year. If the proportionately based on the turnover of last financial year. If turnover of last financial year is not available, then take the turnover of last quarter for which the details are available. How do I distribute, sir? If ITC is attributable to only one single recipient, then distribute only to that single recipient. If ITC is attributable to more than one recipient, then distribute it to those more than one recipients. If ITC is attributable to all the recipients, distribute it to all of them. How should I distribute based on their turnover? Then, if any excess distribution is done by whom, sir? If any excess distribution is done by the input service distributor, section 21 says that excess distribution should be recovered along with interest. Section 22 to section 30 talks about registration under GST law. Section 22 talks about person liable for registration. Section 22 says, if you, who is a person liable for registration? It says a supplier of goods or services a supplier of goods or services is liable to take registration in that state or union territory where he makes taxable supply of goods or services if his aggregate turnover exceeds 20 lakh rupees. This limit is 10 lakh rupees in case of 4 special category states, which is these 4 special category states, sir. Make my trip to Nagaland, Manipur, Mizoram, Tripura and Nagaland. For these 4 states, the limit for taking registration under GST law is 10 lakhs instead of 20 lakhs. And there is a notification called as notification number 10/2019, which says if you're a person who is exclusively supplying goods, then you will be exempted from taking registration under GST law for a turnover up to 40 lakh rupees. For you, the registration limit will be how much, sir? 40 lakh rupees. Now, this notification is not applicable for those people who are liable for compulsory registration under section 24. This notification shall not apply for those people who are making supplies in num must time pass states. Num must time past states, meaning Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura, Telangana and Puducherry. If you are doing business in these states, then also this notification shall not apply to you. And if you are making supply of notified goods, which is pan masala, tobacco products, aerated waters, ice cream and bricks, roofing tiles, etc. Section 23 talks about persons who are not liable for registration. Who is not liable for registration? Sir, a person who is making non-taxable supplies, a person who is making exempted supplies, and an agriculturist who is supplying out of produce out of cultivation of land. Section 24 talks about compulsory registration. There are few people who are required to take registration in the GST law compulsorily. Those people who are making interstate taxable supply of goods, casual taxable person who is making taxable supply of goods, person paying the tax under reverse charge mechanism, e-commerce operator who is required to collect the taxes under 52, e-commerce operator under section 9 subsection 5, a person who is supplying through an e-commerce operator under section 9 subsection 5, or a person who is supplying through an e-commerce operator under section 52, non-resident taxable person, input service distributor, TDS and TCS persons and OIDR service provider will have to take registration in the GST law compulsorily. Section 25 talks about what's the procedure for taking registration. So a person who is liable for registration should apply for registration within 30 days of becoming liable. Normally for a single state you are supposed to take single registration, but if you have a place of business in one single state, if you have a place of business in SEZ area and in non-SEZ area, then you will have to take two separate registration. You can take multiple registration in a single state if you have business at multiple locations. Then normally you are required to apply for registration within 30 days of becoming liable. If you are a casual taxable person or non-resident taxable person, you will have to apply for registration 5 days prior to commencement of business. The application for registration is from GST RAG 01. It is having two parts, part A and part B. PAN is required for taking registration under GST law, and once you are registered under GST law, a registration certificate will be issued to you in GST REG 06. A registration certificate will be issued to you in GST REG 06 and GST REG 06, which is a 15-digit code, wherein first 2 digit is state code, next 10 digit is PAN number, then last 3 digit is checksum digit. Next, section 26 talks about deemed registration. If you are a person who is registered under SGST Act or UTGST Act, then it is deemed that you are registered under CGST Act also. Section 27 talks about what's the section 27 talks about special provisions applicable to a casual taxable person and non-resident taxable person. A casual taxable person and non-resident taxable person is required to take registration 5 days prior to commencement of business. His registration will be valid for a number of days. He is opting for or 90 days, whichever is less, and he can also extend the registration, but extension is possible only once. This extended he can extend the validity only once. This extension will be valid for number of days he is taking extension or 90 days, whichever is less. Now a casual taxable person or non-resident taxable person, before commencing the business, he will have to make the payment of taxes in advance. He will have to estimate his turnover, and based on that estimated turnover he will have to make the payment of taxes in advance. And further, if he is extending his registration for that extended period also, he will have to make the payment of taxes in advance. Section 28 talks about amendment in registration. If there is any amendment or change in registration, you will have to apply for that amendment or change within 15 days of the change. If the amendment is with respect to core field, then the proper officer is going to approve that amendment in 15 days. And if it is non-core field amendments, then no issues. As soon as you make the amendment, that amendment is going to get reflected on the portal. Then section 29 talks about cancellation of registration or suspension of registration. Your registration can be cancelled by the proper officer, or you yourself can cancel the registration. You yourself can cancel the registration if your business is discontinued, if there is a change in constitution of business, if you are no longer liable to become liable to take registration under section 22 or section 24. Then your registration will be cancelled by the proper officer if you have not filed the returns, if your registration is obtained by fraud, willful misstatements, or you have not filed the returns if you have not started the business within 6 months from taking the registration, if you have violated the provisions of GST law. Now, till the time your registration, say I have applied for cancellation of registration, the registered person has applied for cancellation of registration, till the time the cancellation application is approved, your registration will be treated as suspended. Then section 30 talks about revocation of cancellation. Section 30 talks about what's the revocation of cancellation. So revocation, so if the registration is cancelled by the GST officer, then you can apply for revocation. The registered person can apply for revocation. This revocation should be applied within 90 days from the date of order of cancellation. This can be extended further for a period of 180 days. Then the next topic for our discussion is tax invoice, debit note and credit note. Tax invoice, the time limit. What is this, sir? Tax invoice. We have already discussed about the time limit to issue tax invoice. Apart from that, what is important with respect to tax invoice in case of goods? In case of goods, the tax invoice is required to be issued only by a registered person who is making taxable supplies. It is required to be issued in triplicates in case of goods and in duplicates in case of services. Tax invoice, the invoice number, there are various different contents of tax invoice. One of the major important content is the invoice number. The invoice number should not be more than 16 digits. The invoice number should not have any special characteristics except hyphen, that is dash and forward slash. Then the tax, you are not required to give any tax invoices if the value of supply is less than 200 and if the supply is made to an unregistered person and that unregistered person does not require any invoice. Now in your invoice you are also supposed to mention your HSN code. In the invoice which is issued by you are also supposed to mention something called as HSN code. Sir, how much HSN code I should mention, sir? HSN code, it depends on your aggregate turnover. If your aggregate turnover is more than 5 crore rupees, then you will have to mention 6-digit HSN code. HSN is basically 8-digit code. But if your aggregate turnover is more than 5 crore rupees, then you will have to mention 6-digit code. And if your aggregate turnover is less than 5 crore rupees, less than equal to 5 crore rupees, you have to just mention 4-digit HSN code. In case of B2B supplies, compulsory should mention 4-digit. In case of B2C supplies, it is optional. If you feel like mentioning a 4-digit code, you mention, or else you can ignore. Then there is also provision of e-invoicing. E-invoicing provision will be applicable for all the B2B supplies which is made by a registered person. Now whatever B2B supplies are made by the registered person, they are required to be authenticated electronically on the GST common portal. Under e-invoicing, what will happen, sir? Under e-invoicing system, an identification number called as invoice reference number will be generated once you register the invoice in the invoice registration portal. This e-invoicing is applicable to a registered person whose aggregate turnover in any preceding financial year starting from financial year 17-18 was exceeding 5 crore rupees. So this e-invoicing is applicable to all the registered person except government CPICs. It is not applicable to government authorities or local authorities. It is not applicable to cinema halls. It is not applicable to passenger transport service providers, government CPICs, PII4. It is not applicable to insurance company, banking company. It is not applicable to GTA, and it is not applicable to S for whom, sir? Government CPICs. S for SEZ units. Next, bill of supply. Bill of supply is a document which is required to be issued when you are making a supply which is not taxable. So if you are making an exempt supply, or if you are a composition taxable person who cannot collect taxes on his supply, these two persons, you are required to issue something called as bill of supply. Revised tax invoice is a document which is required to be issued for all the supply made by you from the date you are liable for registration till the date of grant of registration. So normally, if you are liable for registration, you should apply for registration within 30 days. And once you apply for registration, that registration should be will be granted to you. Once it is granted to you, within 30 days of registration being granted to you, you will have to give a revised tax invoice from the date you are liable for registration till the date of grant of registration, whatever supply was made by you during this period. Then receipt voucher. Whenever you receive any advances for making the supply, you will have to issue a document called as receipt voucher. At the time of receipt of advances, if you don't know what is the tax rate, apply the tax rate of 18%. If you don't know what is the nature of supply, then take the nature of supply to be what's interstate supply. Then refund voucher. There is something called as refund voucher. Refund voucher. Whenever you are refunding the advances, you will have to issue a document called as refund voucher, provided you have not made any supply. And payment voucher. Whenever you are making a payment for inward supply liable for reverse charge under section 9.3 or 9.4, those people, then you will have to issue a document called as payment voucher. You will have to issue a document called as what, sir? Payment voucher. Now then we have something called as credit note. Credit note. The credit note is issued to decrease the value of invoice which is already issued by you. Say for example, the tax rate which is charged by you is more than the actual tax rate. Taxable charge by you is more in the actual invoice which is given by you. There is a sales return, or there is a case of deficiency in goods and services provided by you. Then debit note is required to be issued only in 3 cases. Whenever if you want to increase the value of invoice which is already issued by you. So this debit note will be issued by you to increase the value of invoice which is already issued by you. Say for example, the tax rate which is given in the actual invoice is less, but the tax rate which you were supposed to apply is more. So to increase the tax rate, to increase the taxable value, or when the quality of the goods and or when the quantity of the goods and services are shown less in the actual invoice. Then you can issue a document called as invoice or come bill of supply if you are making both taxable as well as exempt supply. Then we have a document called as Rule 55 Challan, also called as delivery challan. This delivery challan is required to be issued when you are transporting the goods for reasons of supply, or for when you are sending the goods to a job worker for reasons other than supply, or when you are transferring liquid gas. Now, accounts and records, then a new topic has been introduced for CA inter students. It was already there for other CMA as well as CS students. Accounts and records. Now, books of accounts are required to be maintained by every registered person. He is required to maintain these books of accounts in principal place of business. He is required to mention the true and correct details of these books and he is required to keep the true and correct records of these books and books of accounts, which will include the books of accounts with respect to production, inward supplies, outward supplies, stock in trade, input tax rate, how much input tax rate you have taken, how much you have availed, how much is available, how much you have availed, how much is reversed, how much is blocked, etc. Output tax, how much you have paid through input tax rate, how much you have paid through cash, etc. Then, sir, what if I have more than one place of business? If you have more than one place of business, then books with respect to those places should be maintained at that places only. Accounts can also be maintained in electronic form, and also you should make sure that whenever you are maintaining books of accounts in electronic form, that should be authenticated by use of digital signature. Normally, you are not required to alter, change, delete any entry which is already passed by you, or you should not overwrite any entries which is already made by you. If you make such overwriting, etc., always authenticate, always maintain a log about who has made that changes. Now, for how long should I retain these books of accounts? Books of accounts are required to be retained for a period of 72 months from the date of furnishing annual return to which such books of accounts pertain. So books of accounts are required to be retained for a period of 72 months from the due date of annual return. For example, for financial year 23-24, the due date of filing annual return is 31st December 24. So for this year, you will have to, books with respect to this year is required to be maintained by you till 31st December 2030. Okay, 72 months is nothing but 6 years. So 31st December 2030. Then concept of e-way bill is there. What is this concept of e-way bill, sir? Who is required? E-way bill is required. When is e-way bill required to be generated? E-way bill is required to be generated whenever there is a movement of goods happening. With this movement of goods can be due to supply for reasons other than supply, or because of inward supply from unregistered person. E-way bill is required to be generated where the consignment value for the supply which is made by you exceeds 50,000 rupees. If the consignment value is more than 50,000, e-way bill is required to be generated. Now, e-way bill is required to be generated in a form called as now please note, consignment value. When you are taking the consignment value, please also include taxes also. Consignment value is value of supply as per section 15 plus taxes under GST law. It shall not include the value of exempt supply. Consignment value shall include the taxes under GST law, but it shall not include the value of exempt supplies. Then what's an e-way bill is generated in a form called as form GST EWB 01. It has two parts, part A and part B. Part A, you give invoice level details, and part B, you give transport related details, transporter, GST number, vehicle number, etc. Now this e-way bill cannot be edited for your mistakes, but only thing which you can do is cancel the e-way bill within 24 hours of its generation. There is a validity for the e-way bill. The e-way bill is valid for every 200 kilometer or part thereof. The e-way bill is valid for 1 day, and for in case of other than over dimension cargo, which is nothing but normal trucks. But for very big trucks, for big trucks, the validity period is for every 20 kilometers or part thereof, the validity is 1 day. Now this e-way bill is required to be once an e-way bill is generated, the information will go to supplier, recipient as well as the transporter. Now the recipient is required to accept the e-way bill or reject the e-way bill. This acceptance or rejection is required to be done within 72 hours. If they do not do the acceptance or rejection within 72 hours, then it is deemed as accepted. Now the validity of e-way bill can be extended within 8 hours before the expiry or 8 hours after the expiry of the validity period. Now e-way bill will now the government says we are not going to allow you to generate e-way bill if you are a composition dealer who has not paid the taxes for 2 quarters continuously, if you are a normal registered person who has not filed his GSTR1 or GSTR3B for continuously 2 tax periods. Then what are the other next returns under GST? Sir, what are the different types of returns which we have under GST law? Returns under GST is GSTR1 is a return for outward supply. It is required to be filed by 11th of next month. If you are a person who has opted for QRMP scheme, who can opt for QRMP scheme? Those people whose turnover is less than 5 crores can opt for QRMP scheme. If you have opted for QRMP scheme, the due date of GSTR1 will be 13th of next month following the quarter. GSTR2 and GSTR3 is not there. We have something called as GSTR3B. GSTR3B, it is a summary return, simple return, wherein you give the details of outward supply, output tax, and details of input tax, and you make the payment of taxes. So how do I make the payment of taxes under GST law, sir? I make the payment of taxes under GST law by using a return called as GSTR3B. What is the due date of making the payment of taxes under GST law? 20th of next month. Always please remember what is the return by which I make the payment of taxes under GST law. I make the payment of taxes under GST law by using a return called as GSTR3B. What is the due date of filing this return, sir? 20th of next month. For example, for April it is 20th of May. Now if you have opted for QRMP scheme, for you the due date of filing this GSTR3B also will be on quarterly basis. It is on 22nd of next month following the quarter, or 24th of next month following the quarter. GSTR4 is a return which is required to be filed by a composition dealer. The due date of filing this is 30th April of next financial year, because it is required to be filed once in a year. And he also has to make the payment of taxes on quarterly basis by using a form called as Form GST CMP 08. And the due date of this is 18th of next month following the quarter. GSTR5 is a return filed by a non-resident taxable person. Due date is what, sir? It is required to be filed on monthly basis, 20th of next month, or within 7 days from the expiry of registration. GSTR6 is a return required to be filed by input service distributor on monthly basis by 13th of next month. GSTR7 is a return which is required to be filed by TDS person on monthly basis by 10th of next month. Then GSTR8 is a return which is required to be filed by e-commerce operator under section 52 on monthly basis by 10th of next month. And GSTR9 is an annual return which is required to be filed by every registered person. The due date is 31st December of next financial year. Okay, GSTR10 is the final return. Once your registration is cancelled, within 3 months from cancellation of your registration, you should file this GST final return. GSTR11 is a return which is required to be filed by UIN holders. Now, what is the late fee for filing returns, sir? The late fee for filing nil returns is ₹20 per day, subject to a maximum of 500 rupees. For other cases, it is ₹50 per day, subject to a maximum of 2,000 rupees if your aggregate turnover is up to 1.5 crores, subject to a maximum of 5,000 rupees if your aggregate turnover is up to 5 crores, and if your aggregate turnover is more than 5 crores, the maximum amount which they are going to collect is 10,000 rupees. Minimum amount is ₹50 per day. 50 means what's that? 25 rupees CGST, 25 rupees SGST. And if it is a nil return, 10 rupees CGST, 10 rupees SGST. Then payment of taxes. Next chapter for our discussion is what's the payment of taxes. It talks about 3 ledgers: electronic cash ledger, credit ledger, and liability ledgers. So whatever output tax you have now, electronic cash ledger, whatever cash you deposit in your GST portal will go in this electronic cash ledger. The cash can be deposited in the GST portal. The cash can be deposited in the GST portal using what, sir? You can deposit the cash in the GST portal. You can deposit the cash in GST portal using payment challan called GST CMP GST PMT 06. This is the challan which is required to be used by you for depositing the money in your GST account. This deposit can be made through online internet net banking, online modes, UPI, debit card, credit card, etc. You can make the deposit over the counter also, but subject to a maximum of 10,000 rupees. Electronic credit ledgers, there is a section called as section 49.5. Section 49.5 talks about manner of utilization of input tax credit. Your IGST credit should first be utilized for the purpose of paying IGST, then you can utilize it for making the payment of CGST or SGST in any proportion. First you should completely utilize IGST, only then you can go to CGST. CGST credit should first be utilized for making the payment of CGST, then you should utilize it for making the payment of IGST. Then SGST should be utilized for making the payment of SGST first, then you can utilize it for making the payment of IGST. SGST will never be used for making the payment of IGST. SGST will be used for making the payment of IGST only when CGST is not available for making the payment of IGST. Okay. Then electronic liability register, whatever type of liability you have, whether tax liability or interest penalty, late fee liability, that will all go in and sit in your electronic liability register. Now output tax which is there, output tax liability which is there, that can be paid either through utilization of input tax credit or by cash. Now normally if you are not paying the taxes within the due date, now normally the due date of paying the taxes is what, sir? 20th of next month. Normal cases 20th of next month. If you don't make the payment of taxes within this due date, then you will have to pay interest at 18% per annum on net tax liability payable in cash. You have to pay interest on at 18% per annum. Say for example, due date is 20th of next month and you have filed return on 28th. So from 21st till 28th, for 8 days you will have to pay interest at 18% per annum. You will have to pay the interest. Whenever you take excess input tax rate, even in such cases, you will have to pay interest at 18% per annum. Now, how do I discharge the liabilities? The liabilities are required to be discharged in the following manner. First, pay the self-assessed tax and other dues of previous tax period. Then pay the self-assessed tax and other dues of current tax period. Then pay any other dues under GST law, including the dues of section 73 and 74. Please note, normally the tax amount can be paid through utilization of input tax credit or through cash. But there are some payments which should compulsorily be made in cash only. Which are the payments which are required to be compulsorily made in cash? Your RCM liability compulsory you should pay in cash. The tax which is required to be paid by a composition dealer is required to be paid compulsory in cash. Then what, sir? Then what is required to be paid compulsory in cash, sir? Then we have your other dues, interest, penalty, late fee, you are required to pay compulsory in cash. Then TDS and TCS also is required to be paid compulsory in cash. Now, apart from this, next topic for our discussion is section 52, section 51 and section 52. So, interest liability was section 50 and ledgers, payment of tax section 49, section 50. 51 talks about TDS and 52 talks about TCS. Section 51 talks about what's a TDS and section 51 talks about TDS and section 52 talks about what's a TCS. Section 51 newly added for CA inter students, not applicable for CMA students. Now, who is required? Section 51 is applicable to whom, sir? Who is a deductor under section 51? Central government or state government department, local authority, government agencies, and other notified persons, such as those people in whom 51% or more voting rights is there of government, or society established by central government, state government, or a public sector undertaking. These people, whenever any person is supplying any goods or services whose contract value is more than 2.5 lakhs to these deductors, then these deductors at the time when they are making the payment to the suppliers will have to deduct the tax at 2%, 1% CGST, 1% SGST. Now, the contract value shall not include the taxes under GST, and it shall not include the value of exempt supply. So, if the contract value is more than 2.5 crores, then the deductor will have to deduct the taxes at the time when they are making the payment to the deductive. What is the rate at which they have to deduct? 2%, 1% CGST, 1% SGST. Whatever taxes they are deducting, no, they should make the payment. They should deposit it with the government within the due date. What is the due? Within the 10th of next month. If they don't deposit, sir, 18% interest will be levied. Then, section 52 says TCS is required to be collected by an e-commerce operator. Whenever a person is supplying goods to an e-commerce operator, and if the payment is also routed through such e-commerce operator, then that e-commerce operator at the time when he is making the payment of taxes to this, to the supplier, he will have to collect the tax at 1% of net value of taxable supplies. 1% means 0.5% CGST and 0.5% SGST. Please note, it includes all types of e-commerce operator except section 9 subsection 1. See, basically it talks about Flipkart. Now we have Pliya Sarees and there is a customer. So customer places an order on Flipkart. Flipkart gives the information to me. I supply the goods to customer. Customers make the payment to Flipkart, and Flipkart makes the payment to me. At the time when Flipkart is making the payment to me, Flipkart is required to collect the taxes at 1%, 0.5% CGST and 0.5% SGST. So what is happening under 52? There is a supply which is made by a supplier through an e-commerce operator, and the payment is also coming to the supplier through e-commerce operator. Now, TCS is required to be collected on net value of taxable supplies. So what is this net value of taxable supplies? If the consideration is collected by what is net value of taxable supplies? Take your total sales which is made by total taxable supplies made through e-commerce operator, subtract the supplies which are covered under section 9 subsection 5, supplies the value of supplies which are returned. Please note, you should take only taxable values. Exempted supplies if you are supplying, then please don't include it. You will get net value of taxable supplies. Deduct 1%. Now please note, there is no limit over here like TDS. TDS, the limit was 2.5 crores. But here there is no limit. Even if you are making 1 rupee supply, you will through an e-commerce operator under 52, TCS is required to be collected by e-commerce operator. Then one last topic left over for our discussion is topic of place of supply. Now please note, all the topics which we have discussed till now, they are all from which act, sir? CGST Act. All the topics which we have discussed till now, it is from which act, sir? They are all from CGST Act. Now what we are going to see is from which act, sir? Now what we are going to see is from IGST Act. IGST Act, place of supply. Place of supply, IGST Act. IGST Act talks about place of supply of goods. Now, Section 7 gives the meaning of interstate supply. Section 7 says interstate supply means where the location of supply and place of supply is in two different states or two different union territory, one state or one union territory, or it is a case of import or export of goods or services, or it is a case of supply to an SEZ unit or SEZ developer, then it will be called as interstate supply. Intrastate supply means the location of supply and place of supply is in same state or same union territory. In Section 9 talks about supply in territorial waters. Whenever you make a supply in territorial waters, the location of supplier and the place of supply will be nearest coastal area. Now, Section 11 talks about time of supply. Section 10 talks about time of supply of goods when the supplier as well as recipient is located in India. Time of supply of goods. Section 10 subsection 1 clause A, where movement, if the supply involves movement in goods, the time of supply will be the location where the movement is terminating. Then Section 10(1)(b). Please note we are talking about which section. The sections of which acts IGST Act. Section 10 subsection 1 clause B says when the movement is caused by third party, the place of supply will be the principal place of business of the third party. Section 10 subsection 1 clause C says where there is no movement of goods, then the location of the goods of the time of delivery will be taken as place of supply. Section 10 subsection 1 clause CA, very important, newly added, it says where the supply of goods is made to an unregistered person, then check whether address of that unregistered person is known or not known. If address is known, then his address will be taken as time of supply. If address is not known, location of supplier will be taken as time of supply. Then in case of installation and assembly, in case of installation and assembly, the time of supply will be what's the place of installation and place of assembly. And in case when you make a supply on board a conveyance, the time of supply will be the time of supply will be the location where the goods are taken on board. Time of supply is what, sir? In case supply is made on board a conveyance, location of goods at the time, location where the goods are taken on board. Then in case of import and export, if you are importing goods, the location of importer will be taken as time of supply. If you export the goods, the location of the place outside India will be taken as time of supply. Now, important is this time of supply in case of services where supplier and recipient both are in India. Section 12 subsection 2 general rule or default section says where the supply is made to a registered person, the location of a registered person will be taken as time of supply. Where the supply is made to an unregistered person, if the recipient's address is available, then the location of that recipient will be taken as a time of supply. If location of recipient is not available, then the location of supplier will be taken as time of supply. Then in case the services are directly related to immovable property such as architect services, construction services, interior decorator services, renting of hotel, inn, guest house, boat house, etc. In such cases, the place, the time of supply will be the place where the immovable property is located or intended to be located. Now, if the immovable property is located outside India, then the place of supply will be taken as location of recipient. Then, in case of what? In case of restaurant, beauty treatment and fitness services, the location where the services are performed will be taken as time of supply. In case of training and performance appraisal services, if the services are provided to a registered person, location of registered person will be taken as place of supply. If it is to an unregistered person, the location where the services are performed will be taken as time of supply. In case of admission to an event, entry fees, the time of supply will be location where that event is held. And in case of organization of an event, the time of supply will be taken as what, sir? If it is given to a registered person, then the location of a registered person. If that services are given to an unregistered person, then the location where the event is held will be taken as time of supply. In case of transportation of goods, including by mail and courier, the time of supply, if it is given to a registered person, the location of registered person. If it is given to an unregistered person, the location of the goods, the location, the place where the goods are handed over for transportation. In case of passenger transport services, if it is given to a registered person, location of registered person. In case it is given to a unregistered person, then the location where the passenger embarks the conveyance for continuous journey. Then in case of services supplied on board a conveyance, whenever you are in aeroplane, if you are getting in any services over there, then the first scheduled point of departure of that conveyance will be taken as time of supply. In case of telecommunication services, if it is fixed line, location where it is fixed. If it is prepaid, location of supplier. If it is postpaid, billing address. And in case of online, the address which is mentioned by you, that is nothing but that will be taken as place of supply. In case of banking company, financial institutions and stock broker services, if the services are supplied to a registered person, the location of registered person will be taken as time of supply. If it is to an unregistered person, location of supplier will be taken as time of supply. In case of insurance services, the location of recipient will be taken as time of supply. Now, then we also have time of supply in case of what, sir? We also have time of supply, place of supply in case of services where location of supplier is in India, a location of supplier or location of recipient. Any one person is in India, meaning one person is in India and one is outside India. This is not applicable for CA inter students, but applicable for others. So, general default section, the default section, what's the location of the recipient will be taken as place of supply. If the location of recipient is not available, location of supplier will be taken as place of supply. In case, please note, section 13 talks about place of supply of services where either the supplier or the recipient, anyone among them is not in India. In case of performance based services, location where the services are performed will be taken as time of supply. If they are performed through electronic means, if the services are provided through electronic means, or they are temporarily, if you are importing any goods into India on temporary basis, then you will apply section 13 subsection 2. If the services are directly related to immovable property, the location where immovable property is, the place where immovable property is located or intended to be located. In case of admission or organization of an event, the location where event is held will be taken as place of supply. In case section 13(3), 4 and 5 are given at more than one location, including a location in taxable territory, then the location of taxable territory will be taken as place of supply. If section 13(3), 13(4 and 13(5 is in more than one state or union territory, then it shall be in India, then it will be taken proportionately. In case of services by bank intermediaries, location of supply will be taken as place of supply. In case of transportation of goods, destination of goods. In case of passenger transportation, location where the passenger embarks the conveyance. And in case of services supplied on board a conveyance, first scheduled point of departure. And in case of OIDR services, location of recipient. Now please note, this is not relevant for you from exam point of view. From exam point of view, what is important is section 12(2) and section number 10. Very, very important, section number 10 and section number 12(2). Now, one more point is there in this chapter, which is what, sir? What do you mean by zero rated supply? Zero rated supply means export of goods or services or supply made to an SEZ unit or SEZ developer. And one more point, importation of services means the supply is located outside India, recipient is located in India, and the place of supply is in India. This completes our entire discussion, entire revision of GST. We have taken exactly 1 hour 30 minutes, or I may say 1 hour 31 minutes for completing the entire revision. We have just taken 1 hour 30 minutes. In 1 hour 30 minutes, I have revised entire GST for 50 marks. This is a very useful revision. Okay, this is very useful for those who have already studied. This will be very useful for you. So those who are writing examination in say September month, November month, December month, etc. Whenever June month, July month, whenever your examination is there, whenever you are traveling, you can use it. You can use it for your revision purpose. You can use it for super fast revision purpose. Now I hope you enjoyed this. I hope you enjoyed this. Let me meet you very soon in my next video. Till then, tata, bye bye, take care students. All the very best for your examinations. All the very best. God bless you all.